Hello and welcome to Tax Matters. I'm Chiamaka Ohaochi. The word tax naturally brings to mind payment of a certain sum imposed by government for the purpose of raising revenue from certain sectors of an economy with the aim of taking care of certain sectors of the polity with the revenue so raised. But as you'll find presently, tax administration goes beyond levying and collecting of taxes or money if you like. Tax administration also involves the government letting go of rightful taxes, sometimes to bring relief and succor to certain disadvantaged sections or segments of the economy, or to encourage investment in critical sectors of an economy. In these instances, you begin to hear words or phrases like waiver, exemptions, and incentives. As part of the reforms being undertaken by the Muhammad Nami administration at the FIRS, new departments have been created. Among them is the Tax Incentives Management Department. Mr. Lucky Obodeke is the director in charge of that department. You are the director, Tax Incentives Management Department at the FIRS. Now, what is the role of the Tax Incentive Management Department, and what can you say are your achievements or innovations so far?
Maybe let's start from the beginning. Let us understand what tax incentives are. An incentive is what is given to induce somebody or to attract somebody to do what ordinarily he wouldn't do, or what he's been doing at a lower scale and you want him to upscale it. So tax incentives are given to attract taxpayers or entities to enter into some lines of businesses, or to encourage them to do certain lines of businesses based on the judgment of the managers of our economy. In classical economics and taxation, they say in taxation, the primary purpose is to raise revenue. But beyond raising revenue, we also redirect consumption. We also attract investment into specific sectors of the economy. So tax incentives are given to help investors enter into some sectors of the economy. That is one aspect. The other aspect, incentives are also given to existing taxpayers to help them to comply with the obligations. I am sure in the recent times you have heard FRS in an effort to help taxpayers to comply. We say, okay, if you are having interest and penalties, accumulated over a period of, with government approval, FRS can ask you, okay, forget about these interest and penalties, pay the principal sum and go, but sin no more. Incentives come in different forms. So, Federal Inland Revenue Service in the past did not have a specific department handling tax incentives. But in 2021, this department was established. There is a saying that when you want to enter into the mighty ocean, you start from the shallow point. So we didn't take the full gamut of all that falls into tax incentives. We started in a very small form. But presently, we have onboarded companies that are enjoying pioneer status. We have onboarded companies in the free trade zones. We call them enterprises in the free trade zones. And we also have the NGOs. Gradually, we will onboard more functionalities and more aspects of tax incentives. That is one side, and that is the side that is known to the public. There is another side to what we do in tax incentive department, which is extremely crucial to not only FRS, but to the government. That aspect is the aspect of tax expenditure. We need to quantify, produce data showing how much tax we have forgone. So if you ask somebody, don't pay because we want you to do certain things, you also want to know how much tax would that person have paid. So for all the taxes that are administered by FIRS, we are also warehousing data relating to the tax forgone, popularly called tax expenditure. So That is what we are doing. We also have the NGOs with us, which is very popular. In fact, we have a very large population of NGO in our tax base. And you know what NGOs do. They help to reach some people or some entities which government are also expected to reach. But if government did not reach them, the NGOs, some of them come in to bridge some of this gap. You know that what they do are majorly humanitarian. Some are educative. Some are also in the areas of advocacy, maybe about elections, but they all add value to the society. So we have a large population of NGOs in our registry. Tax incentive has come to stay. And I am looking at the functions of the department increasing gradually, as we onboard many other functionaries. For example, we have not brought in solid minerals because they also enjoy a whole lot of incentives. There are other incentives that are silent. For example, they give investment allowance to companies that acquire plants and equipment. That investment allowance, 10%, is an incentive because it's not even taken into consideration in computing capital allowance. To use local balance is a dash to the investor for at least having faith to either invest or to expand existing plants.
Now, I would like to ask, some of these incentives that you've mentioned, are they backed by law or the FRS Establishment Act?
Incentives majorly are backed by laws. In fact, it is the laws that stipulate the incentives. For example, the Industrial Development and Contracts Relief Act, IDITRA, is the one that establishes the Pioneer Scheme incentive, and it's been around for almost like 40 years or more. So the free trade zones, they also have their own law, the Oil and Gas Free Trade Zone and the Nigerian Export Processing Zone Act. So it is laws that establishes these incentives. FRS, as an institution, we are only an implementing agency. It is government through laws that determines incentives that are to be given to taxpayers and the categories of taxpayers who should enjoy such incentives. And if there are sunset provisions, like under Pioneer, that first 3 years, you get 1 more year or another 1 year, maximum 5 years. So it's government and it's by law.
Now, you mentioned NGOs. Now, I would like to know, what are the requirements of NGOs under our tax laws?
The requirement for NGOs is not different from that of other taxpayers. Every entity is expected, every taxable entity is expected to, one, register under the relevant law. So for NGOs, they have their own registration, which under the Companies and Allied Matters, under Part C, by guarantee, they should register. They go through some clearances from security agencies, and also they have to register for tax. It's a statutory obligation. Registration is not tantamount to paying of tax. Registration helps to know the population of taxable persons or entities within your jurisdiction. So NGOs are expected to register. Majority of them are not liable to pay tax. The law does not require them paying tax, profit tax, because they don't trade to make profit. However, if they deviate or on the sideline carry out any activity that will result in profits being made, they are required to pay tax on such activities. The other is that they are, like every other person in the country, consumers. And when you consume, there are taxes that are associated with consumption. They have to pay it, except if there is a law saying they should not pay consumption tax. For example, there is the provision under VAT that humanitarian funded projects, there should be no VAT on it. So in such situations, yes, they wouldn't have to pay. Lastly, they also do jobs or give out contracts. And when they do so, we expect them to act as agents of collection for withholding tax for FIRS and to remit that. So when they remit withholding tax, actually they are not the ones paying because the incidence is not on them. The incidence is on the person they are paying, the contractor. So they are just doing an advance payment of profit tax on behalf of the contractor. And under our current system, whatever is remitted goes straight to the credit of the contractor under our tax promax.
Summary: ecclesiastical bodies, humanitarian organizations, also known as NGOs, ordinarily don't pay tax because, like Mr. Bodeke said, most taxes, like companies' income tax, are tax on profit. But when an NGO or a religious organization engages in an activity beyond its remit, taxes are due. This brings to mind the landmark case of 1974, wherein Reverend M.F. Shodipo and others took the then Federal Board of Inland Revenue before the Federal Revenue Court in Lagos on a matter related to the tax assessment served by the FBIR on the Methodist Mission in relation to her property in Lagos known as Wesley House. The property was leased to various tenants and income derived therefrom was stated to be applied to charitable purposes, including the various missionary establishments and educational institutions of the Methodist Mission in Nigeria, that is to say, for the advancement of education. However, the shares of the company were practically owned by the first and second plaintiffs. The plaintiffs brought an action before the court, praying for declaration and injunction relating to the liability to pay tax on the rents received or accruing from the property. The third plaintiff argued that it was a company engaged in charitable or educational activities of a public character, and that taking the charitable character into consideration, the mission was exempt from tax under Section 26, subsection 1C of the Companies Income Tax Act 1961. The Federal Board of Inland Revenue, on its part, contended that since the third plaintiff was involved in the activities of developing and letting property, it could not be said that such activities were charitable. The view of the Federal Board of Inland Revenue was that rental income received from ownership and development of property constituted trade or business within the meaning of the relevant income tax legislation. In dismissing the claims of the plaintiff, the Federal Revenue Court held that where the objects of a company formed for charitable purpose showed that it was carrying on trade or business, its income will be accessible to tax on the trade or business carried on. Even if the income derived from the letting of Wesley House was wholly devoted to charity, the third plaintiff company will still be accessible to tax on such income. The judge held that it is clear to me that the company is doing precisely what it was formed to do, namely, carrying on the business of a company dealing in real estate. Therefore, on the whole, I have reached the conclusion that the plaintiffs are accessible to tax in the rents received or accruing from the property situated at Marina, Lagos and known as Wesley House. Accordingly, the claim for a declaration and injunction that the plaintiffs are not accessible to tax on the said rental income is dismissed. Secondly, every organization must register with the relevant tax authority. Thirdly, and related to number 2, every entity must file returns. Because again, just like Mr. Bodeke said, filing returns does not amount to paying of taxes. They are two distinct matters. We move on. So it used to be said that in the past, tax incentives were put in place without FRS input or knowledge. Correct us if you like. Now, with the creation of your department, have we achieved synergy?
This question speaks to how tax incentives are granted. Everywhere around the world, you have three legs to tax: the policy, the law, implementation. The area of policy is more controlled at the macro level. The entities involved in formulation of tax policies, FRS is just one of such entities. So in formulating tax incentives, FRS will make contributions. Not only the tax incentives management department, we have a tax policy department, we have a legal department, we have the operational department who will bring into the basket their various experiences and expectations. So FRS is just one entity that contributes to the formulation of tax incentive. The Ministry of Finance, the Ministry of Trade and Investment, different ministries, depending on the targeted industry or the targeted entities, will bring arguments. For example, recently, there's this talk about startup incentive, which is being championed by Ministry of Telecommunications. So FRS will come and bring their knowledge of tax, not only from within this jurisdiction, but from every other jurisdiction in the world, put it on the table, and the issues about the benefit, cost-benefit analysis, and even some other considerations are put into place. So yes, we have more visibility, we have more reach, we have more interactions now than in previous time. Most inquiries relating to incentives are now properly directed to a specific arm of FRS, which is this department. However, the issue of policy formulations relating to tax incentive is still a collaborative one between FRS and many other organs of government.
There you are. NGOs, religious bodies, charitable organizations by any name must register with relevant tax authorities and must file returns. We thank Mr. Bodeke on your behalf. We move on. Last episode, we brought you the first part of the interview conducted with Barrister Samuel Abuja, the 16th President of the CITN, on his agenda for his 2-year tenure. Among other things, we asked Barrister Abuja to set an agenda for the new federal administration. The concluding parts. A vibrant tax system is very crucial for the development of a country. Now, what is your assessment of the Nigerian tax system, and in what ways can it further be improved or strengthened?
Okay. Generally, when you talk of tax system, you are referring to the tax policy, the tax law, and the tax administration. And if I must start with tax policy, we are not short of good policies in this country. So we have that. But because of the nature of taxation, we may need to keep on reviewing so that we will not be left behind. Tax policy will lead to tax law. We have the law. But again, we must state at this point that there are some obsolete tax laws in the country. The immediate past government has tried to use Finance Act to ameliorate or mitigate the issue of obsolete tax law. The current government needs to do more in the aspect of Finance Act to address those shortcomings in the tax environment. Of course, if I must move to tax administration, I will give kudos to FRS. They've done very well within a very difficult moment. What FRS did between 2019, 2020, 2021, during the COVID, and some other state internal revenue service is enormous. We need to appreciate ourselves when we do very well. People were going through ASUS, and FRS was collecting money. So some people, we need to take a break and say, hey, wait a minute, guys, how are these people doing it? So they've done very well, but they need to do more. They need to improve on their relationship with people. And the feedback mechanism which the current head of FRS is paying a lot of attention to needs to be improved upon. I know this because I know the kind of engagement that has come into the fore, looking at the tax promise. They didn't just dump it on us and say, okay, we have a new system, comply with it. They've been engaging people. The current engagement, which we appreciate as tax professionals, is the fact that, okay, because of the issues arising from VAT, difficulties in filing VAT, they are extending the deadline. That is a listening organization. We will do a lot better once we continue along this path. And I recommend this approach to various state internal revenue services too. Because in most cases, we focus too much on federal government, forgetting that we have 36 state government and FCT making 37 in the country. If FRS alone is doing very well, and the state internal revenue services are not complementing, then the outcome will not be good for us.
What are your expectations from the new president of Nigeria in the area of taxation?
I tell you, a lot of expectation. And it's not just about me, it's about the country. You know, if you want to know what a man will do today, look at what he has done yesterday. It is on record that he came to Lagos and the revenue for Lagos state government was in the region of 600 billion. I was not told. I have been involved in tax practice before 1999. So I know, I can relate with this. And I practiced taxation all my life in Lagos. So I can relate with what this man did. So, and what did he do? Just put the necessary system in place. And knowing that people are not relating with putting system in place, good system in place, it demonstrated some confidence building mechanism, steps. The Kudirat Abiola way, many people may not know, was in shambles when President Tinubu came to power in 1999. The Igondo Road was in shambles. Awolowo Way, Ikoyi, Broad Street, and some other roads in Lagos were in bad shape. So what did he do? He went for first-class construction. And those roads are still there till today. So the moment he did this, it was like, okay, let me demonstrate good intent and action. Then once you see this, I expect you to follow me. He did that in Lagos, so I expect him to do the same thing. Demonstrate good intent and action. We need to, I advise the president specifically on this, on waivers. If there must be waivers in order to grow the economy, maybe you want to encourage some people, a product, some people to come into the country. It's economic decision, it's not a problem. But if you want to do that, can you please make it business decision in the interest of the country? Because we are waiving the interest we are supposed to collect today so that the company can be alive and be buoyant, so that they can pay you more tax tomorrow. So, but can this decision be business-like decision? Can we take politics away from granting waivers to company? The moment you make it political, you don't get the benefit. And the Nigerian people are the ones suffering from this. That is and this money runs into a whole lot of billions of naira. So we need to look at this. There's something this immediate past government did that I also appreciate. Nigeria cannot undo our infrastructural deficit overnight. So the tax credit for infrastructural development is important. One, the construction of government can be very slow. Their process can be very slow. And even for value for money can be another headache. Just for you to be convinced, of the benefits of this tax credit for development. Look at what Dangote has done from Apapa to Tollgate here. Go to Abuja, I've driven on that road before. Go to Ilaro, Ibichi. These are evident. So can you just follow this path so that you fast track our developmental needs? Because without infrastructure, the country cannot do well economically.
Thank you very much, Barrister Samuel Abwele. You really appreciate your time.
Thank you very much. I appreciate you.
And we wish you well on your tenure.
Thank you.
That's where we draw the curtains on this first episode in the Ember months of 2023. A quick reminder, Finance Act 2023 took effect from Friday, September 1. Go out there and fulfill your civic obligations. And talking about Ember months, put your vehicle in serviceable condition and don't drink when you drive. Ain't nothing wrong with Ember months. Pay your taxes and stay safe. See you next week.